Hi, everyone, and welcome to the podcast. We have a very special guest on our Noble Gold bi-monthly podcast that we do typically with Colin. We actually have a special guest that Colin has handpicked for this particular time. And today's gentleman's name is Micah Haince, and he is a senior sales associate at Noble Gold Investments. Because of the holiday season and the pivotal time that we're in with the economic shift of the parallel economic system from the Fed to an asset-backed system, which you all know by watching our podcast. So he's going to be helping us navigate through where he sees things going this month, but also more importantly for the first quarter of 2026 that we're all watching notably. So if you're new to the podcast, please do like, subscribe, and share. Helps the channel grow and others to gain in the knowledge you're currently being afforded. As we always do with first-time guests, we will read Micah's bio summarily. Micah Haince is a senior sales associate at Noble Gold Investments with nearly a decade of precious metals experience as an investor and a buyer. Early in his investing journey, Micah recognized the long-term risk posed by unchecked money printing, growing debt, and the gradual erosion of the U.S. dollar. Viewing these trends as both as a threat to financial security as well as a powerful tailwind for precious metals, he summarily took action to protect his family and personal wealth through strategic allocations through gold and silver. Over the past 5 years, Mike has been a key member of the Noble Gold team, where he's consistently ranked as a top performing associate. He's helped thousands of clients diversify their respective portfolios, preserve purchasing power, and navigate through uncertain economic conditions with confidence, much like where we are today. He's known for his straightforward approach, deep market knowledge, and commitment to putting his clients first and foremost. Mike has earned the trust and long-term loyalty of a large, growing clientele base. His mission is very simple: educate, guide, and empower individuals and families, respectively, to make informed decisions about protecting their wealth in an increasingly unstable financial landscape. And with that, we join Micah Haince to the podcast. Micah, welcome, and thanks for being here. How are you today,
John,
good sir?
thank you. Thank you so much for having me on. It's a pleasure. I've seen your show. I'm so happy to be a partner and to have this opportunity. So thank you very much. And I don't know who wrote that, but it sounds like they're getting all the right boxes ticked off. So I appreciate that as well. Thank you.
Thank you. It's an honor to have you here. And I was telling you offline, if Colin felt he deemed it important to have you here, you must be. So I'm looking forward, as our
Oh,
audience is, to
thanks.
getting the knowledge you have to share today.
Yeah.
Now, before we start, I
Yeah.
have to give a shameless plug to Fernando and the marketing team for the
Oh yeah.
generous Noble Gold hat,
Good.
which,
And that's the blue one there, I see.
yep, the blue with the
I've got
gold.
one. I've got one that's like a hunter green, almost the same as my walls. I don't wear it all the time, but
Nice.
I sport it around town enough. Yeah, good.
Yeah.
I'm glad you got
No,
one of those.
I'm looking forward to wearing that on my vacation out in Florida with the family for the holidays. And then, of course, we'll reprise this at the end of the podcast, as you know, a very generous offer that you guys gave us, which is the commemorative 2025 Seasons Greeting Silver Coin, limited minting, limited edition for the holidays. And there's a special promotion that Noble's offering for qualified accounts, again, which we'll talk about at the end. So, starting at the top, Mike, as we see precious metals, silver in particular, last week alone, we saw a massive spike in pricing to about 6% increase. And I think as of the futures markets, as I take a look right now, it's up near $67. A moment ago it was 67.07, which you
Yep.
know. So
Yep.
it's recovered and almost going up another 6% roughly. Is this a customary price spike, or is this symptomatic of something coming much bigger in the way of value for gold and silver, as we're seeing all-time highs since 1980?
Yeah, thanks, John. It's been such an exciting market, and you're right. Today alone, 5% up for silver. On the week, it's 10%. For the month, it's over 30. In the last 3 months, it's over 50. And silver for the year from the lows, around 28 in the middle of May, we're up almost 120%. What we're seeing is a historic breakout from a multi-decade cup and handle formation. I do a lot of technical analysis, and that's one of the best things to see break out when they finally do. They can produce absolutely massive price increases. But silver, as you know, John, is also one of these extremely suppressed commodities. So what we're seeing is the historical breakout in a technical basis. We're seeing decades long suppression break as well. They're not able to control the silver price with paper products anymore. We have a world that demands physical silver. Paper promises will not do anymore. And so the fundamentals for silver, which we'll get into, I'm sure at some point in today's episode, you just don't have as much as people think. And now that you actually have to have it in your hands, we're seeing, I think, the beginning of a very, very strong repricing and what I call like price discovery in one of the most important elements and obviously monetary metals globally. So it's a prime asset that's poised to take everyone by storm, and it's only getting started, even though we've seen these great price increases so far.
Agreed. And thank you for the breakdown of week, month, year. That was, I think, told a very important story that we all know for the validity and the importance, the ever increasing importance, and the supply issue of silver for that matter, given its use in manufacturing, yes, which you alluded to earlier. So, Micah, talk to those who are listening to our podcast, both your audience and my audience, because I know you have clientele that will probably watch you, that haven't purchased precious metals due to fear of price spikes, that they might be getting it at the wrong time, or that they think everything's great in the market, it's perceived as good. Maybe they have an IRA or a 401k and they've been just kind of sitting on the sidelines because of that and kind of, hemming and hawing and pausing. Talk to that contingent of our audience, why you're convinced in the 10 years you've been doing this and what you're seeing in particular this year you just mentioned, why they shouldn't wait and why they should even be investing on an ongoing basis.
Yeah. Thanks, John. So price is certainly one thing. Of course, it's risen a lot in the last year or two with gold and both silver. But there's a few things to really remind folks of. Price is really just a unit of measurement. If we think the dollar is going away or the dollar could eventually go to zero, what's the point in pricing an eternal element, an eternal form of money, a universal form of money, something that's been money and considered money and the best store of value for 5,000 years? What's the point of pricing it into currency that you think is going down? That's one thing. Two, I believe that gold and silver are an investment. There's a time and place where they can make you absolutely enormous amounts of money. When the conditions are right, the best and safest place to be are physical precious metals. But they also happen to be like kind of an insurance product. Yes, they're an investment, but this insurance side is you're out of the dollar. There's no currency risk. You're out of the bank with physical metal. There's no financial institution risk. You're out of the stock market with a portion of your 401k or your IRA or just your savings, right? Which would otherwise be part of that financial institution. So, de-risking from the banks, de-risking from the dollar. And the stock market will, at some point, we'll get into this a little further, I think it'll have an absolutely massive correction. We have the most expensive stock market of all time right now. Using the Buffett yardstick, we're at like 220% of GDP. That's the valuation of the US stock market. Anything over 100 is considered expensive. So to go from 220 back to 100, which would still be in overvalued territory, that's 60% crash. We see the metals spike usually after a stock market crash as we get a capital rotation, right? People go from wanting to own stocks during times that are good, economic growth, different sectors booming, like tech, of course, as we've seen in the last few years. But once the stock market crashes, most people will only reactively realize they need this insurance. They need the safe harbor of physical metals. So I was lucky enough, John, to early on realize that everybody needs some of it. Now, allocations and how much of your portfolio should be dedicated to it, there's no cookie cutter solution, right? It's everyone's got their own personal setup that makes the right sizing for them, but everybody needs this stuff, and very few have actually realized this. So one of the things that makes me the most bullish, even though, as we've seen, prices risen dramatically just this year, is that overall, all of the gold and silver assets in American portfolios only represents about 0.5% of an allocation. So contrast that with 70% is in stocks, the highest concentration that we've ever had at probably the worst time, right? Again, most expensive stock market of all time. Boomers now are mostly in retirement. There are a few more coming on, but you're going to have the biggest stock market crash of a lifetime when 70% of allocations are in stocks. If we do see something like that, John, and just 3 to 5% of what is in stocks from that 70 flows into gold and silver, which I think is a low range. We could get up to something like 10. Even normal financial institutions are saying the new portfolio allocation for the future is 20% gold, 20% bonds, 60% stocks, as opposed to the normal 60-40. So if we get anywhere even in the 3 to 5% ownership range for physical metals, it implies 6 to 10 times more money and larger market caps in this space, which could proportionally mean 6 to 10 times higher prices in both gold and silver. So yes, have they risen a lot? Of course. Is it still early, and is it still time to get in? Yeah. You want to have insurance before the flood comes, right? You want to have your insurance settled up. You can't call your insurance company and get a new policy once the storm is kind of underway, right? You have to get it before.
Exactly. I mean, the key is, and has always been on our channel and yours as well, respectively, and with Noble Gold, is to be proactive, not reactive. Because you don't make
Exactly.
good decisions when you're coming from a place of desperation in life. We all know this in various and sundry examples. And you touched on a key thing about Warren Buffett, which I'm going to use into the next question. So thanks for the indirect segue. He is now starting to put out the comms about an upcoming crash. They always do this. They always put it out there because they put out breadcrumbs for the people who are paying attention, the
Exactly.
1% or less, to make their moves accordingly. Excuse me. So I want to float something by you, Micah, and this is just your own personal opinion based on your experience, but your experience carries weight. Our team has a theory on the next Fed selection. President Trump is looking to choose primarily between either Kevin Hassett or Kevin Warsh. Warsh, you'll note, is a Jamie Dimon JP Morgan holdover. Is it possible that President Trump might pick Warsh because of something I saw here that you can correct me if I'm wrong, but I believe JP Morgan is the single largest holder of silver with over 970 million ounces, staggering amount. So there's a two-part question. Is Trump working possibly to pick Warsh to work with Diamond to get at that silver, to put certificates back in for the new gold standard that we all know is coming, and then audit the Fed in Fort Knox, bake the Fed into the Treasury, and then implode the Fed once the said crash happens, then bring in Judy Shelton as his Treasury chair. As we know, she's a gold bug. She's written a lot of publications about long Treasury bonds, 50, 100 year.
Absolutely.
And if that all happens, what significance would this have on the precious metals prices for gold and silver as a result?
Great. Wow. Lots to unpack, but I think we can tackle it all. First, we'll just talk about Hassett versus Warsh, the Kevins. I think we have Hassett winning slightly on online betting. I think they have a 51% or 53% chance of him winning over Warsh. So Hassett, I know that both have been in conversations with Trump prior to. We should get some kind of announcement soon about who that will be selected. Now, my opinion on this, which might not be the most popular, but he'll choose whoever is going to be the most accommodative. Trump has been asking for rate cuts since he got back into office. Of course, Jay Powell has actually given us some this year, one as recently as last week. But I think we will see a very strong demand for much lower rates, and the selection decision that Trump makes will be based on who's going to give him the lower rates faster. That's my opinion. And the reason for that, of course, is we're in an economic recession already by many metrics. Labor's been weakening for a long, long time. The real economy, we all know, is very, very poor. The problem is that the stock market has become the barometer for the economy and how it's doing. And with the stock market at all-time highs, we just have people declare that everybody's winning, everybody's fine, everybody's richer. But really, you have this huge kind of wealth gap, right? Now, the reason they're cutting rates and they want more rate cuts is to get ahead of an economic recession or any kind of financial crisis. It could be led by a stock market crash, or a recession could cause a stock market crash. So they want to provide easy monetary policy and liquidity in order to kind of either avoid or prolong that imminent moment where things go down. Now, the idea of merging, and maybe this is why they would choose Warsh, is to have access to all that silver. You're right. JP Morgan is the biggest custodian of silver in terms of like financial institutions. They've also had the biggest short positions as well over the years. They've actually been fined billions of dollars from their silver spoofing, which occurred, back in the previous post GFC run between 2008 and 2011. So they would actively manipulate the price. They were charged, I don't know if it's criminally, but they had billions of dollars in fines they have to pay. Recently, JP Morgan's rumored to have actually gotten rid of their short position. And that's actually why we're seeing such violent and volatile price spikes now in silver, that they're just long. They're ultra long with this massive, largest institutional silver position. So there could be something there, choosing wars to be able to access the silver to then use that. But that would actually take it out of funds it's already supposed to be in, like SLV. SLV being an ETF. I don't believe in owning the paper stuff, but you do have underlying physical that is supposed to be there. Now, whether it's actually there or if it's been repossessed or collateralized by somebody else, those are all the things to be worried about. That's why you want to own your own physical gold and silver that belongs to you. But that could be something that we'll see. Now, the merger between the Treasury and the Fed and this leap into a gold standard, I've shared with you, John, I believe that we will inevitably return to a gold standard. That's just the natural kind of life cycle of money. You start with it, you move off of it, you destroy the currency, and you have to come back to having gold pegged or back to the currency to reinstill confidence so that people believe that money is performing its right function of preserving value and being used as a unit of exchange. But if it's not doing one, it can't do the other. And that's why you see in hyperinflationary currency crisis type of scenarios, what happens is, it doesn't matter what currency it is, it's worthless, right? Like we saw this in Venezuela in 2020. We've seen the historical example of Weimar Germany. Zimbabwe is a good example of this. Turkey more recently, even Lebanon, like all these places have experienced high and hyperinflation. My view is we will have the most accommodative Fed chair selected because no government, and this is not a dig on Trump, I love him, I support him, but he won't give up his ability to print money and lower rates in order to save the economy. He's got midterms next year. He'll throw everything he can to avoid a stock market crash or an economic crisis going into midterms. He will bail out the boat as every other government has through every other cycle, really since we came off the gold standard, which is flood the system with cash, lower rates to zero. We saw that during COVID. COVID was $9 trillion of money printed out of thin air, pardon me, in just a matter of like 2 years. I think the next economic crisis probably sees something closer to $20 billion, or sorry, trillion. It was 9 trillion in 2020. It'll be, in my estimation, 20 trillion or more printed in order to save the economy in the next crash. It's after that, John, that we will have a gold standard because confidence will be gone. We had 9% inflation in the peak of COVID. And that's the government number, which is obviously not even, that accurate. They're editing out a whole bunch of stuff from CPI to make that seem lower. My view is we'll probably have something like the 1980s. Like you've got 18, 20% rate of inflation, and that'll be the fudged government number. That's high or hyperinflationary territory. Now, of course, these things act on a lag, right? If we have a crisis in 2026 and we flood the system with cash and we drop rates to nothing, it won't be until maybe 2028 that we're experiencing 18, 20% inflation. At that point, any dollar denominated assets are going to be crushed, right? You have to own non-dollar denominated assets like tangible commodities and especially the monetary metals, because as you come out of that crisis printing, and again, it's not a political dig on anybody, just no government will give up the ability to try to save the system while they're in office. So coming out of that, we'll have to repeg to a gold standard. And the plan that Judy Shelton has with gold-backed bonds could work. I just think that there's so much ground to cover in the meantime. And unfortunately, it's like the strategy is to destroy the dollar first.
Yeah, absolutely. Thank you, Micah, for tackling those. I'll have another two-part question for you in a moment that
Right.
I'll interweave together, and for sake of time for you in the audience. It's funny you mentioned 18 to 20% interest rates, because that's no coincidence, not coincidentally, the time when we were taking off the gold standard in 71, when we saw all that before you and I were around. But our parents experienced it, and we saw the ramifications of that. We're still dealing with it 54 years later. I'm not personally of the belief that Trump's going to be, and I like him too, is going to be able to stop the crash because there's just too much momentum. We've kicked the can down the road to an untenable
Oh,
degree
exactly.
that I think it's going
Exactly.
to have to happen here pretty soon. And we have a team member you may or not know that works for Schwab who does the analytics on the market. And that's leading my next question. And you look at you mentioned Zimbabwe and Venezuela because their currencies aren't currently backed by anything, but that's going to change as the countries are now. Look what he's doing to oust Maduro. Part of that is land rights and mineral rights. But
Yep.
what is that leading to? A nationalization of their country. So, like Venezuela, for example, the Bolivar could flourish with assets in the ground and be standalone vis-a-vis BRICS, are
Exactly.
de-pegging themselves from the dollar, as you rightly pointed out. So, I actually
Yes.
see a nice marriage of going back to an asset standard, which helps the U.S. note treasury
Yep.
backed, no longer the Federal Reserve, which is not tied to any assets. Most people don't know that. Our audience does. And then at
Yep.
the same time, achieving an autonomy for these countries that were held back by said Federal Reserve dollar, if you will. So, taking that to my question, if you will, Micah, the next one, you're talking about rightly about deception within the stock market, deception within the rate of unemployment. John Rich wrote a book years ago talking about the real rate of unemployment is probably closer to 20%. And we've had guests who corroborated that. So now look at this, for example, Mike, in a nice contrast, the Dixie, which I think has been a holding pattern for a lot of people to not invest in metals because it looks strong, even though there's no purchasing power. And you know this by when you go to the grocery store or the gas station, or if there are any malls left, or wherever you go to shop, et cetera, Home Depot. It takes more dollars to buy the stuff you've always bought. You're not getting more of it or better quality. So what's the common denominator? A dead dollar, no purchasing power. So give us your prediction. Do you see, as we see a crash coming in early 26 and a gold standard valuation for that? And what is your outlook on the US dollar strength against other major currencies and how it will fluctuate given these variables?
Mm. Yeah, thanks, John. Yeah, there's a lot of interesting stuff to monitor, right? Like I try to look at charts, not just gold and silver, but all the interconnected stuff. So the Dixie, the US dollar strength relative to other currencies. You look at bond yields. You can look at other currencies. The Dixie or the US dollar strength index, it started the year at around 110. Okay, right now it's sitting at around 98. 12-point drop in 12 months. That actually is reflected by gold and silver. We had a 12% drop in the strength of the dollar. You have a 120% pop in the price of silver. Unfortunately, what I think is a lot of this administration's goals, not just the money printing and the low rates in order to stimulate the economy and avoid a recession and keep the stock market chugging along. It's also one of their strategic initiatives in terms of having all of this manufacturing come back to the US. I think that's a great goal. I think that's absolutely worthwhile. The idea of reshoring and bringing jobs back and kind of the end of globalization, that makes a lot of sense. But you can't be a huge and successful global goods producer with the most expensive currencies. So the sort of the untold side of this is that they have to sacrifice the dollar in order to achieve some of these goals. Now, I do think that the dollar, the US dollar, the Dixie probably slides further. I mentioned it's probably around 98. I see it going probably into the mid 80s next year. So we'll have more or less a similar kind of downtrend. And that's not without counter trend rallies, which means the trend is down, but it can obviously have these months or weeks where it's popping up and it wants to retest resistance or not crash below a support level right away. And we're kind of seeing that now, but still, I think the long-term trend is down. Again, this is sort of being done in order to keep asset prices to be perceived as continuing to go up, right? Now, this again kind of tying into the death of the dollar and the introduction of a gold standard. I don't think we'll have a proactive shift to a gold standard in 2026, although I'm sympathetic to the narrative and I would love to see it. Don't get me wrong. I would love to have gold repriced at $25,000 an ounce in time for the 4th of July in 2026, the 250th anniversary of independence. What a better, like, is that not a great kind of thematic announcement to have, especially with Trump having a lot of these, kind of, like I said, thematics around gold. Who has the gold makes the rules. He said that a golden era for the USA. He said a lot of that. I still think we're years away because there's a huge problem between us and an actual resetting to a gold standard. Unfortunately, the dollar trend down, the metals trend up, and the crisis that we're going to have to deal with in the meantime, that's just something we're not going to be able to work around. So I think I tackled most of what was in that question, John, but you'll let me know if I skipped over something. I hope I didn't.
No, you're fine. I threw a lot at you. It's just, touching on what we talked about a moment ago with bricks and the delineation between that and the dollar, because they're with the unit, they're
Oh,
separating.
yeah. And do you mind if I talk about bricks? I think,
No,
like,
go
the
ahead.
last 2 years, I didn't think we'd see such big progress there, right? Like what really kicked it all off was 2022. Um, Russia invading Ukraine in 2022. The US froze and stole 300 billion in treasuries, right? Say, oh, we don't like what you're doing. We're going to steal all this money that you hold. And of course, countries hold US treasuries to have access to dollars because on the petrodollar system, everybody had to, prior to 2022, everybody had to settle all their energy and oil and gas transactions in US dollars. Even if China's buying Russian oil, it happened in US dollars. Well, the acceleration of this parallel system, this brick system in which they'll settle transactions either on the unit, the BRICS unit, which is, pegged to gold, maybe some other commodities. And I know that there's still a lot of stuff getting worked out there, but look at what China's been doing. They've been selling their treasuries. They're normally a huge buyer. Japan's normally a huge buyer as well. They've been selling their treasuries. You had in September, I think, the first time in 80 years where the nominal amount of money held amongst countries is now higher in gold than in treasuries. So it was always treasuries were here and gold was here. And we've seen this trend now of everyone's buying gold hand over fist. And then finally, the nominal amount of reserve assets held in gold is more than in treasuries. That kind of locks that trend in too, right? Like countries have been buying for the better part of the last 5 years. I think it started in 2020, but really since 2022. People still aren't buying it, as I've kind of explained, with only 0.5% in American portfolios for anything gold and silver related. But this acceleration in having a viable alternative system to be able to trade amongst each other. Now, it is an East versus West thing. It's very geopolitical. Axis versus allies is kind of the way that I see that. And there's been a lot of other ramifications from it too, right? We don't have now the traditional demand that we do for treasuries because there's not a lot of treasuries being sold at auction. You actually have, the government stepping in to then buy more. Like we got 40 billion a month is what the Fed announced last week of what they were going to be buying in T-bills. You've also had yields on bond market spike, which increases, the cost of servicing anybody's debt, any kind of commercial debt, whether it's mortgages, credit cards, auto loans. That stuff's all based on the 10-year treasury note. So all these various impacts, but what I'm most interested in and kind of concerned about in a way, but for me as a precious metals owner for many, many years, I'm again more excited than anything, is China is developing like a global vaulting network for physical gold and silver to be held by various countries as a neutral reserve asset, but those metals will be allowed to be collateralized by China in order to receive infrastructure funding. And so, example would be they'll collateralize the gold of some African country in order to build infrastructure or a highway or a mine and stuff like that. So the normal historical asset that would be collateralized as treasuries, they don't want them. We're shifting away from the dollar and it's happening faster and faster. And again, I think that's, look at the charts and where I think it's going. Look at the big trends globally. What's that saying? Watch what they do, not what they say, right?
Right.
If there's a reason they're buying all this stuff hand over fist, there should be a reason that you need to do that too. But you pointed this out, the elites will leave little breadcrumbs for their friends to kind of get the signal, the smoke signal before get out now while it's still good. Buy gold now while it's still cheap. Unfortunately, most individuals, which we're trying to help the most, they're left holding the bag at the last minute, and they only do it reactively instead of proactively.
Exactly. And that's what we on these podcasts, as you know, and you're helping, are wholly tasked to do, is try to wake and gin up the awareness as much as possible. And then you might as well throw in India into the mix and their aggressive buying of silver and gold, and how much gold they produce over there. When you
And
talk about
allowing silver to be collateralized as an asset for loans, that's very recent too. They'll actually
good
take
point.
your silver, they'll let you keep it, but they'll provide you a loan on that. So that's, to anyone who says silver's not a monetary metal anymore, well, I don't, maybe not here, but it's happening there, and it's probably coming here too.
Well, there's no doubt. And it's basically, to me, a form of staking, really, much like you do with cryptos. And then you look at the Fed, you talked about that, Mike, a moment ago. They're the only ones buying the 10 and 30-year treasury yields, which is basically just buying toxic debt. Because, like you said, nobody wants it. It's this big delineation pull away from the old system to the new. There's just an air of inevitability about all of it and what you're sharing. But I would just say to you, and I totally respect your conclusion. That's fine. I just personally I think you and a lot of people are going to be a surprise what we see in 2026. It's going to, I think, happen a
Oh
lot
yeah. I
quicker
think
than we think,
2026 will have a lot of surprises for sure. And look,
in a good way.
this is where, in my time here, John, I've heard it all. Like, I'm very sympathetic to Nicera Jacera. I'm very sympathetic to the quantum financial system. The only thing is I've heard about them being like, implemented imminently for over 10 years, right? And it's like the direction that we're headed is the same. The final destination is the same too. The final destination is gold and silver are remonetized, they're revalued in a significant and dramatic way. We all protect ourselves by owning it, but it could take this path or that path. We don't really know. There's so much speculation. There's a lot of ways this could play out, but the way to be able to hedge and win either way is to own it, right? To own it right now.
No, 100%. And that's kind of where we're circling around the wagons. And all those things that you just mentioned are all legitimate variables. And it's been happening. It's an ongoing process. It's not like it just happens
Yes.
one day. It's a fluid thing
Oh yeah.
over a period of time. And my point was just that time is now speeding up exponentially from what you heard 5 years ago, 10
Yeah.
years ago. It's not the same world, not the same system that we,
Exactly. Exactly. And
things
it's
are
only going to
changing.
get crazier. It's only going to get crazier. And I think, again, there's going to be so many shocks for us in 2026.
Yes, and in a good way if you're prepared, like we are, and are trying to get
Right.
our audiences new and established to do
Exactly.
so. To what we were talking about earlier in this discussion. So I'll leave the sort of the $1 billion question. You and I talked about this offline. You have a very good, legitimate, and I would say corroborated theory as to this question that I'm going to let you expound on. President Trump has been openly talking about a gold revaluation. You see it everywhere. Golden age. You see it replete in the Oval Office. I mean, it's pretty obvious comms. So it's a two-part question. Could we see gold going in the near future to 20, 25,000 an ounce, and silver going from 12 to 1 to 3 to 1 to 2 to 1, possibly even 1 to 1 at some point in the not too distant future once he does that?
Yeah. So a few things to consider there, John. First, just in terms of like fundamentals, and I share this with clients a lot so that they kind of realize, again, that kind of like scarcity of silver and where it maybe should or will be priced in relation to gold. So when we talk about the ratios, the price ratio between gold and silver and the gold to silver ratio, at one point this year was 100 to 1, 105, right? That was in the middle of May. At that point, I actually had a lot of clients who've been with me for years who knew how to track and measure or to understand what the gold to silver ratio is telling us. When it's extremely high, you want to sell your gold to buy silver. As a precious metals bull market and this, death of the dollar and revaluation of gold and silver, as that cycle progresses, you're going to have the gold to silver ratio drop. I ultimately Well, sorry, let's do the numbers first. So I'll tell you what I'm expecting, and I will also preface that with I am very conservative. I would rather under promise and over deliver, on with everybody. So their natural occurrence in the ground is 15 to 1, 16 to 1. Okay, that's gold to silver in the Earth's crust. The historical gold to silver ratio, and this is going back thousands of years, is also 15 to 1. So they're the same. The mining supply ratio, which is how much gold comes out of the ground versus how much silver, is an 8 to 1. But we know that industrial demand, which is going through the roof, everything from missiles, solid state batteries, solar panels, data centers, everything. It's the best conductor in the world. It's used in medical applications. It's antibacterial. It's even used in like Lululemon clothing. I mean, silver is like the most magical element of all time. 60 to 70% of what's mined every year goes to industrial. We have a multi-$100 million deficit the last few years. And I think I heard next year alone, we expect a 300 million ounce deficit in silver. So of the 800 million ounces that are mined every year, 60 to 70% right now goes to industrial. The rest goes to monetary purposes like bullion that we sell and that people should own in their portfolio. But that's expected to go to something like 90% in the next 5 years because of, again, just everything, all the industrial uses are going up. So if you have 8 to 1 coming out of the ground, but more than half of that is going to industrial, it really means there's only about 4 ounces of silver to invest in for every 1 ounce of gold. So a 4 to 1 physical availability ratio in terms of like the, how much bullion is actually available for investment purposes. That's certainly, I think, an interesting way to look at it. We were at 100 to 1 in May. We were at 80 and 75 to 1 most of the last 5 years. We were just there in September, October. We've dropped quickly into the mid 60s just in the last couple of weeks with this big price pop and explosion in the silver price. Where I see this going, and this is at the very minimum, after the 2008 global financial crisis, when the stock market crashed by 50%, gold was actually at an all-time high right before. It was $700. Of course, we all wish we could go back and buy more at that price. But stocks and gold were at all-time highs together pre-GFC, $700 gold. Well, the stock market crashed by 50%, gold tripled in 3 years, but silver 8.5 times. So in 2011, where they peaked the previous cycle, okay, it was a 30 to 1 gold to silver ratio. My minimum target is we get to that. I optimistically think 20 to 1 is doable. There are, again, cases that could be made of 10 to 1 or single digits to 1, but I really want to kind of keep it optimistic but realistic. I think 20 to 1 to 30 to 1 is exactly where this is going. And the opportunity for clients who were selling their gold 1 ounce for 100 and for silver in May, if we go from 100 to 1 to 20 to 1, you're going to get back 5 ounces of gold for the 1 ounce you exchanged at that 100 to 1, right? I just kind of had this conversation last week. It was at 75 to 1. I said, if we're expecting 25 to 1, why would you even buy gold now? You want to buy silver at 75 to 1. You hold on to that for 2-3 years. If we go to 25 to 1, you trade those 75 ounces over for 3 ounces of gold. We do those exchanges for clients. So if you buy gold here, you get 1 ounce. That's all you'll ever get, right? But if you want to make more money or own more gold, the path is actually through silver. So GSR is a very interesting metric to monitor, and I keep it closely in my formula of what's going on and what makes sense to buy. And it still heavily favors silver, even with the silver price. It's historically undervalued, right? Like the average is 15. Maybe we get back there, maybe we get below. I think there's a chance. It's just I'd like to see how things shake out, right?
Absolutely. And then just circling back a moment, Micah, to what you were talking about the Dixie, I forgot to cover that with you. Our friend on our team that works with Schwab was predicting 80 on the Dixie. He actually thinks it could go down to 60, which would say to the public at some point 60. That's almost a 40-50% drop in we know it's less than that, but to the public's purview,
exactly,
that eviscerates the perception of the dollar's strength.
And it has a magnified effect on precious metals prices, right? If we drop 12% this year and silver's up 120, that's a 10-fold. If we're going to see a 20% drop next year, does it go up 200% from like an already much higher price? So that's entirely possible. It's the reason why you need to own some non-dollar denominated assets. Best beneficiaries of that trend obviously are gold and silver, but any commodity is going to do well in this next cycle. As the dollar goes to zero, anything you can put your hands on is going to skyrocket, but only the monetary metals will come back into the fold and be revalued at a rate that's obviously high enough to reinstill confidence in the system and to get back to a sound money system, which I'm a big believer of. Um, and again, we just need time to see how quickly this stuff plays out.
Yeah, absolutely. So, Micah, real quick, I want the audience to hear this because you have a because you are conservative and you're not like emotionally vacillating and you aren't promising and over delivering, which is key. Give us what you said was your conservative prediction on the gold and silver evaluation you were telling me offline, please.
Yeah, so I use like historical performance in past cycles. I've obviously studied the 1970s very closely, the early 2000s, so '01 to 2011. That's another big one there. I still think, and this is, again, we've talked about ownership of metals. We're still early on because it's half of 1%. We're not at 3 to 5. In 1980, we were at 10. But I think we'll see, and this is bare minimum, and it could be in 2 or 3 years, but I prefer to say by 2030. Okay, I'm looking for 10,000 at least in gold. And then I think if we achieve my 30 to 1 gold to silver ratio, that'll correspond with like $333 silver. Now, I think we get a 30 to 1 regardless of what happens to the gold price. So if it's 25,000 or 50,000 or, pick your price, I still think we'll at least achieve a 30 to 1 on the GSR, which, do the math. 300 silver at 10,000, $600 silver at, that's still a 10 times from where it is now. So gold leads a precious metals bull market in terms of the trend. It goes first. And you'll remember 2024, gold broke out in March. Silver still lagged. Gold had broke out above 2,100. It was making all these new highs. It went from 21 to 25 to 28. Then it retraced back to 25, but then it went to 34. Then it went to 44. So gold was moving, making all these big nominal highs, but that is what it does, is it attracts all this smart money, all the sovereign wealth, all the big investors, all the institutional money. It moves first. But then when silver gets activated, it moves higher, faster, and bigger on a percentage basis. And we're in that now. Silver only just broke new nominal all-time highs just like a month and a half ago, right? October 20 something, 24th. So
Yeah.
silver is going to produce much bigger returns. It always does. It actually outperforms gold by anywhere from 2 to 3 times. I mentioned earlier from '08 to 2011, even though gold was the most expensive ever at that time, it still tripled. And we can see that, right? Gold's the most expensive ever today, but the stock market hasn't crashed yet. Once that happens, the rotation of capital of 70% of people's wealth being in stocks, that flight to safety will come to us. That's when you have a real explosion in the actual market cap and price of gold and silver. And you can see, easily 10. So 10 is my low figure, 300 in silver. That's like more than doubling your money at this point in gold, but maybe almost 5xing your money in silver. So we don't promise that the past is obviously indicative of how the future is going to go, but things don't repeat, but they rhyme. I do believe in that saying. And I also think we have seen absolutely nothing yet. We have all the stars are aligning, right? You've got BRICS going on. You've got dollar devaluation as a strategic part of the agenda. You've got a physical fundamental shortage, no supply, tons of demand. All these things, we're probably going to see the biggest precious metals bull market of all time over the next 5-10 years. And then at some point they get stabilized, those prices get stabilized much, much higher as a gold standard is reintroduced. So we just got to figure out when.
Yeah, I mean, the bottom line to your cogent point, Mike, is it's inevitable. It's just a question of timing, which we don't control.
Exactly.
But
Exactly.
I personally think it's going to happen much faster than people. And then that's fine. You're giving a conservative outlook, and you have to do that. I just think it's going to, as you said earlier, alluding to that, surprises
Well,
abound.
and then to your very first question, John, with that in mind, and I agree, like there's an option here where it just takes us all by storm and none of us can prepare. Is I
Mhm.
don't know why anyone who doesn't already have a core position wouldn't consider jumping in. Price should almost be irrelevant. If the dollar is going away, it could be $1 million gold, it could be $5 million gold. It doesn't really matter. In Zimbabwe, they have a banknote that's $1 trillion, right? I think it's like 2 or 3 of those to buy a beer, right? So don't think about it in nominal terms. Think about it in terms of the fact that it can't go away. It will always be there. It will be reconnected to the new financial system. And you need to have it before. You should get it proactively and not reactively. You should, again, like insurance on your home or your car, you have to have it before there's an accident or some kind of crisis.
Exactly, and you said it a moment ago with Zimbabwe. Like they have some of the most gold-rich resources in the world. You can dig a shovel a foot below. I've heard stories about this from people. So they're easily going to be able to peg that Zimbabwe money to gold because they're replete with it. And then you have the other issue with this bad boy silver, right? There's two issues, as you know. There's costs, but then there's supply and delivery. So cost becomes less important if you can't even get it. What difference does it make? We saw that
Oh,
during 2020 with toilet paper and paper towels.
yeah, and unfortunately, that's kind of a big, not miscommunicate or misunderstanding, I guess. Someone will call, right? This is kind of a very common experience. So I'm here at my terminal taking calls from new clients, and they'll look at the silver price online and they say, "Oh, it's 66 bucks. I'd like to buy 1 ounce for 66 bucks." I say, "That's the paper price, right? Like I charge lowest in the industry with the best possible service. We beat every single one of our big competitors, and it's by a country mile. I don't
Mm.
really want to have to divulge what other companies charge, but they're actually public podcasts that list a bunch of the bad actors in this space. And we're in the most reasonable level you could possibly imagine for the type of service that you expect. With that said, I don't even buy the metal for spot, right? I have to get it from where it's made. The refineries are running out. They made it from the raw ore that they bought for spot, but their business is they take the raw concentrate, they turn it into investment grade bullion that's IRA approved or in standard bullion items that you have for home delivery, and they have to charge me over the spot price to be able to get it. And unfortunately, as inventories dwindle, things are becoming more expensive for me to get my hands on. And that's before we have our very, very modest markup above our cost to provide the service and have a buyback guarantee and a dedicated broker for life. So, you might be looking at four, $4 or $5 over the spot price. Okay. And people go, what? It's $66. I have to pay $70 per ounce. Yeah, you're looking at the paper price. The cost of owning it yourself and having it there for you is well within that range, and that's very competitive. So there's just some disconnect on how this market works, but that is a normal thing and a normal obstacle to have to overcome with new clients. And of course, all of our team is very, very proficient in dealing with everybody. Most of them are new, right? Most people call us, say, I've been thinking about this for years, but I never made a move. And I have all these questions, and we say, hey, it's not too late. Let's take it from the top. Take it
Yeah.
nice and slow. Let's talk about, everything you need.
Of course, I'm going to agree because that's why we've realigned ourselves with you. As I told you, Noble advertised with us about a year and a half ago when we were just getting our channel sea legs. So it was a great relationship. It was just the timing wasn't there because we were starting out, but also people weren't buying metals as precipitously as they can now see.
Oh yeah,
They can see the tsunami coming more and more off the shore. It's becoming
exactly.
untenable and impossible to avoid and to ignore. Can't put your head in the sand anymore. So yeah, and all my experiences with Noble have always been really great, and I think that you are objectively one of the best out there. And the education and the guidance, I think you're right, is the first step. But just buying is one thing, but if you don't know how to leverage it, can protect it, grow it, steward it to family members, then you've missed the boat, so to speak. So I
Yeah,
really appreciate what you're doing.
exactly. Great.
So,
Thanks, John.
well, thank you, Micah. So as we close out the podcast, I'm going to have you talk about a little bit about some of the holiday promotions. I'm going to show some stuff on screen, so just bear with me. This is,
Yeah.
as I showed earlier, a commemorative coin that Colin and the team were generous enough to offer us. And then I'm going to show on the screen, there's a holiday promotion that you guys are running. So Micah, can you graciously talk about what this promotion entails and how to take advantage
Yeah,
of it?
exactly. So for qualified accounts, we're giving away 10 free ounces of silver, and is this season's greetings snowman silver coin. I really like them. John, I could bore you, but I've got like hand poured silver. I've got coins from all over the world. I like novelty stuff like this. I give it away at Christmas for stocking stuffers and stuff like that. But
Mhm.
we have a promotion for qualified accounts. You give us a call. We'll walk you through what that looks like and what's needed. But we're sending every qualified investor 10 free ounces of silver. And I think that's on until January. So, right now, and this is shocking me even, 10 free ounces of silver not too long ago was, $400. 10 free ounces of silver now today is worth over $700. Right. So again,
Yeah.
it's a small token of appreciation for working with clients that want to work with us. You get promises from other companies of $10,000 in free silver. The problem with those are you're getting taken for tens and tens of thousands before they give you back a little bit of the money they're stealing from you. So for us, I view this as a very nice, wholesome, modest token of appreciation to incentivize people to just make that first call.
Yeah, absolutely. And you can see, folks, we'll leave the link in the description and below the video here. Just go to noblegoldinvestments.com/JD Metals is my promo code, which will give you, of course, the best pricing and service. And great people like Micah will certainly field all the questions you have and help give you some guidance along the way. So, Micah Haince, thank you for joining us from Noble Gold. From
Thank you, John.
all of us to all of you, have a very wonderful Merry Christmas, Happy New Year. Thank you for the relationship, the support, and we'll look forward to seeing you in the new year.
Absolutely. Thank you so much for having me on, and Merry Christmas to you. And I am looking forward to a very exciting 2026. And I just want to say to all of your audience, thank you for supporting John. And if you want to speak with me directly, you can call Noble Gold anytime and ask for Micah. You can speak with any of my other qualified sales associates. We're just here to chat and help you out. So take that first step whenever you're ready, and we're here to serve you. So thanks, John. Thanks again. We'll see you next time.
Thanks, Micah. Take care.